This episode is sponsored by Exactuals, perfecting insurance payments and the data driving them. Jim,
All right.
thank you very much for joining me today. How's life in Boston? Good?
It's going well. We got some real warm weather coming through, and spring is definitely here. So we're all excited, and I think most of our team or all of our team have got at least their first vaccine. So
Oh,
that's great.
that's lovely. As, as,
Yeah.
as much as I don't, I'm trying to avoid talking about COVID and what it means, that always happy to hear that more and more people getting the vaccine. I'm fully vaccinated myself a few weeks in, and it's actually harder to integrate back to society because I'm asking myself, who or where should I go? And at the end of the day, I'm still working from my home office. Now, your background doesn't look like a home office. Did you rent a place?
Yeah, I got tired of working from home, so a couple months ago I rented a small office at the Cambridge Innovation Center, right across the river here in Cambridge from Boston, and it's been really nice. It's a enclosed office, and nobody really is here, so I get my whole kitchen, the whole kitchen here to myself, and it's been really nice to have a little break from home.
So let's start with a quick introduction. Please, Jim, tell us about your company. What are you guys doing? And, as we progress, I'll ask you a few other questions, so we'll get more details.
Sounds good. So I am the co-founder and CEO of Energetic Insurance. We started about 4 years ago. My co-founder, Jeff McCauley, and I, we actually come from the energy industry. So we simply set out to try to solve a big problem in energy. And we got directed very quickly to insurance and decided to start an insurance company. So we like to say that I'm a lawyer, and my co-founder is an engineer. A lawyer and engineer walked into a bar and started an insurance company. And honestly, it's kind of how it happened. We met over lunches or sometimes over beers, and decided that this problem of credit in these energy projects was too big and actually solvable through insurance. So we set out to go do that. But yeah, so the problem that we were dealing with in energy is that we started with solar. So solar, wind, these types of technologies really need to be financed over a long period of time, 10, 15, 20 years. So if you're a business and we only deal with corporate commercial projects, we don't do residential. So if you're a business owner and you want solar on your roof, you're probably going to do a long-term financing to make that affordable for you. Well, when you go to a bank to get financing, the bank asks what your Moody's credit rating or S&P credit rating are. Over 90% of the businesses in the country, in the US, don't have a Moody's level credit rating. And therefore, the banks weren't able to extend them long-term financing. So we felt that, the default risk for electricity is very different than other types of loans, right? You can't operate a business without electricity. I can't really think of one that operates without electricity. Therefore, it's really an existential payment that the business has to make. And
I would love to say a lemonade stand, not a pun about lemonade, but yeah.
I guess, yeah, a lemonade stand, or maybe if you were selling water on like a hiking trail. I've been only able to think of ones like that, but not, let's say 99% of the businesses need electricity. And because it's an existential payment that they have to make, an operational necessity, the default risk on electricity is measurably lower than default risk on other loans. And so what we did is we felt like this misunderstanding or mispricing of the risk was able to be solved by insurance. We started talking to insurers in the US and in Europe, and found a great partner in SCORE, the UK office of SCORE, to launch a credit insurance product that covers up to 10 years of payment default risk on solar and other renewable energy loan financing.
So I'm sorry. So it sounds to me like a financial problem. How is that an insurance problem?
Yeah, I mean it is a financial problem, and we're not covering physical risk. We're not covering damage or the production of the electrons. We are covering non-payment, but there is a whole group of a category of insurance that does cover non-payment on long-term contracts, long-term financings, long-term receivables, and that's generally in the political and trade credit insurance department of an insurer. Our specific product is a trade credit insurance policy that it's a manuscript policy. It's similar, but it has some unique electricity aspects to it. And it is a risk that's not as common in insurance, but very much a major part of many insurers. And so, yeah, we're one of the only ones of the startups that I know, the early stage insurtechs that are doing financial risk and not something related to physical damage.
So you managed to create a. So are you an engines? Sorry, are you an MGA? You're writing your own program, and that's on the paper by Score. Is that their reinsurance side, or which? How does it work exactly?
Yep. So we're a classic MGA, MGU. We do the underwriting, actuarial pricing. It's our policy, our logo on the policy. And Score is the paper, the insurance paper, our initial capacity provider. So they're the insurer. We do not provide balance sheet risk as an MGA. But yeah, we do kind of a full stack MGA.
And you're working only with commercial. And I think that in the last episode, we learned from Philip Naples that there are about 30 million small business owners in the US, and each one of them has its own little thing and a contract and other work and other classes. And if you want to talk about that, Alan Ringwald can talk about their secondary and tertiary class risk. But for you, basically, you're going to talk about energy for, I would say, medium-sized businesses or larger businesses, because how many companies actually have a listing at Moody's?
Not very many. I mean, less
Yeah.
than 10% in the US. I don't have the exact number, but we know
So
it's not
10%,
many.
it's only 3
Yeah.
million, right? Still, you have like
Yeah.
27 million to serve. So
There's a
how do,
lot, a big market there.
yes.
But yeah, we started mostly with smaller and medium-sized businesses, but we're finding that very quickly we got asked to do larger businesses, larger transactions. A lot of what we do is portfolios of multiple projects, so there might be 25 or 50 different businesses that are all kind of a one project developer has installed 50 installations, and they go get one single financing for that whole group of 50. And so we have some nice diversity benefit there. So it can be, but it's mostly medium-sized businesses is our sweet spot. That was the initial thesis where the biggest pain point is, but it has expanded out from there.
Yeah, thank you for actually explaining the sweet spot, because I was just going round and around and around until you actually hit it. Energy, usually we think about energy in terms of strategic infrastructure and all kinds of policies, especially on the green side. Where's the government involved in this, or is there governmental involvement?
Not directly with the insurance policy, but the government is important for providing, obviously, the insurance regulatory framework, the energy regulatory framework, and in particular, a lot of people ask me, how does the new administration, presidential administration, affect us? A lot of this, like what we call distributed generation, which is solar on site, like at your business, is more impacted by state regulations than federal. So curiously, we find that states who have strong subsidy programs, or some of them have created like tradable renewable energy credits that add value to the solar. When you install it, you get an extra payment from the government or the utility. That helps with a secondary revenue source to the project to make it more economically viable. Those are very important programs that really help increase the installation rate. So the government is fairly involved, but I wouldn't say that the driving force behind all these projects. They have to make economic sense themselves, and the government can be an enhancement to help encourage and increase the rate of installations, which I think is a healthy way for the government to be involved. I used to work in the government actually in Massachusetts, so we would talk a lot about the optimal amount of subsidy or incentive to offer to help increase the installations, but not be the sole reason why something's being installed.
Apparently, a lawyer who worked at the government and an engineer walking into a bar. Please continue. What happened when they met in the bar?
Yes. Well, I had been working in the government. I ended up leaving the government to work developing solar projects. So it's important to note, I talked about banks and financing earlier. There's three parties involved in these transactions that I think is important to understand. There's the business owner that buys the electricity. There's a solar project developer, similar to commercial real estate, who will be the construction company. They'll get the permitting. They'll work with the utility company to actually install, own, and operate the solar. They receive the electricity payment from the business owner. And then that project developer goes out to banks and equity investors to get the financing for it. So there really is three parties there, and the insurance policy is bought by the project developer to help provide confidence that they're going to get paid for electricity, so that they in then turn can pay their debt lenders and investors. So that's the structure of it. But how does the engineer and the lawyer get to this? I was trying to develop projects at a solar development company. Jeff was at a different energy company trying to develop solar projects, and we would find these great businesses. They had been around for many years. They were 10, 20, $50 million annual revenue businesses, and we thought they were great businesses to produce solar, and we would get rejected by bank after bank after bank, or investor after investor, and the reason was credit. And so that's really what frustrated us. We're like, but this is not a lot of risk here. This business has been around for 25 years, 50 years. They pay their bills. And so that was really what drove us to it. And we quickly found that insurance does this in many other industries, airline leasing, other forms of receivables. So we just adapted what the insurance industry was already doing to solve this unique risk in energy.
Can you share with us how many projects you are involved at this point?
So by the time this airs, we should be passing 150 individual solar projects that we've covered with our policy. So quite pretty proud of that. It was definitely a little slow there in the beginning of COVID, but things have worked themselves out. The market's kind of mostly back to normal. So we're at 150 now and looking to grow even more throughout the rest of this year.
Who are you working with, Will, or did you start with Adrian?
We started with Will Thorne at SCORE, and we also work with Dana Cullen on the team. So we actually started, interestingly, we had started by talking to US insurers mostly, and ended up finding that the London markets they have a lot of experience in credit insurance. That's where a lot of credit insurance is written, but they also just have that's where insurance started, and they have a very open and kind of innovative approach. I think that London also, they seem to be very collaborative among insurers, which is interesting. They might, for a new risk, maybe they'll have 3 or 4 insurers that each share the risk. So we found a very receptive audience in London. Actually, I met Will Thorne at the very first ITC, InsurTech Connect, in 2016. It was the very first one, I think, and maybe there was about 600 people there or so. And I remember being in the convention center, and I think it was my second meeting. Remember they had you would stand on a number, and then the person would walk up, and then you would have your 15-minute meeting. So I remember that with Will, and I think I had, I think I had I printed out business cards. I made up a company name, because I was about to jump on a plane. I convinced my wife that we were going to use my miles to I was going to go to this conference. I had jumped on a plane, made up some business cards, made up a company name, and showed up with an idea and maybe something written on the back of a napkin, but that was about it. And Will didn't laugh me out of the room, but didn't jump on it right away either. He gave me a year or so to flesh out the idea with Jeff. But by the next ITC in 2017, Will had scheduled a meeting with me and said, I've been thinking about what you pitched to me last year, and I think it has an opportunity there. And so we spent the next 6 or 9 months working with SCORE to really refine the concept, come up with underwriting guidelines and refine the actuarial modeling and get into policy wordings, and eventually agreed on a binding authority with them to be the initial capacity provider. So I would say, yeah, InsurTech Connect had a lot to do with us being able to meet, and the kind of receptiveness of the London insurers to innovative new risks, I think, was also very important.
Yeah, we keep talking about InsurTech Connect. We'll give a shout out to Jay and Caribou that started this amazing operation. Nowadays, it's not on my LinkedIn, but I'm doing a little bit of consultancy work with those guys, and it's amazing team. And there are a few people that everyone knows, from Bill, Josh, Samara, Terry, especially in the partnerships, but there are so many people in this operation that make sure that we have this amazing habit of every year to meet in Vegas. Well, minus 2020, but this year it's going to be there again, and that's going to be a lot of fun. Is it only the two of you? What's the size of the team? Because one of the challenges that most of the, let's call it, insurtech startups, will continue with the joke of a lawyer and engineer entering a bar. Usually it's an engineer and engineer, or a marketing genius with another third-time unicorn founder. How didn't you miss the insurance part? That third founder that knows insurance. How did you manage to overcome that challenge?
Yeah, that's a great question. Very early on, we had some friends that a couple of my college buddies work in insurance, and that was the first thing I asked them is like, we should probably get someone who works in insurance. And they're like, you know what? Remember, this is 2016 when InsurTech was still a new word. So insurers were still, Excel was a very advanced technology for them. No offense to insurers. I think they would be the first ones to agree with that. Many of them still had fax machines as their primary mode of communication. And so my friends in insurance, they said, no, don't bring on an insurance person. You guys focus on the problem in this problem solution, product market fit, come at it from the industry expertise that we have in energy. And even SCORE said that. They're like, insurers have a lot of smart people that work there. What they don't have is industry expertise in every single possible industry that exists. So that's why they want MGAs. And they said, keep that fresh energy focused perspective. You'll get the insurance help. You'll develop the knowledge, and you can bring on insurance people later. So that's what we did. We trusted them. And I think, could we have maybe understood some things faster, moved a little faster in certain ways with insurance? Yes. But the people who advised us said that if we brought on too many insurance industry veterans too quickly, they might not see they might try to drive you to a pre-existing solution when maybe you need a more innovative solution, or maybe you need to combine two types of policy wordings together. So actually we did that. We pulled our policy wording from elements of surety, elements of business interruption. We didn't just have a existing policy form that we pushed into solving a problem. The way I like to say it is like, sometimes insurance has a solution searching for a problem. We had a problem that searched for a solution in insurance, and we adapted, and insurance and kind of the insurance industry and us kind of adapted to solve it. So I mean, it was definitely a different way to do it, but we've really stayed close to the customer, close to the problem, and where our bespoke solution set, I think, is what's allowing us to get the traction that we've got so far.
That's an interesting approach. And I need to remind myself that you are part, in terms of the timing, you are still part of the first generation of the insurtechs, because I
Yeah,
think that a few people that I interviewed recently, they are part of the third generation. If it's a layer, so Philip Naples, Ben Monroe from Brisa, or David McFarland from Coterie, all of them were in insurance. They used to work in insurance, and they left the insurance, well, with except with Philip was a broker all of his life. But those guys were executives who left that big company to start a startup. So that's where we see that development. And here you are still, let's call it the the first the first generation, which is only 4 or 5 years ago. It's like one of
yeah,
the entrepreneurs like, I see a problem, I need to fix that solution, and apparently we can just hire or rent the insurance know-how from somewhere else. And it's based on what you're saying, better yet not to, or at the beginning.
yeah.
So nowadays, do
I'm
you have
glad also
someone?
that we did.
Mhm.
I'm glad that we also had the opportunity to develop our own knowledge. If we had relied on an expert, I don't think we would have learned as much as quickly as we did.
Mhm.
So that was helpful. And honestly, though, you're right. Like, this is more of the third wave. If I was to talk to somebody who's starting an insurtech today, I think the insurance industry has gone through enough innovation cycles that a lot of people
Yeah.
that work are the incumbents would probably be able to understand the innovation process in a more intimate way than maybe you had back in 2016, where it was still a relatively new thing.
Yeah, you needed the fresh blood. You are part of that fresh blood that came in 6 years ago, 5 years
Yeah.
ago. No, that's super cool. What's the size of the team nowadays?
So we're very lean. We probably would have hired a few more people during COVID, but we did want, with all the uncertainty, we slowed on hiring. But including some part-time people, we have 7
Hmm.
of FT full-time equivalents, and so we're still a super lean company. But I think we will be. We are. I was just earlier today writing a series of job descriptions, so we'll be out in the market and probably grow the team to maybe 10 or more by the end of the year.
And as we say, soon an announcement will come.
Always soon an announcement will come.
Yeah,
That's the life of of a startup. Yes.
it's always
Um,
it's between I just finished raising, I'm about to start a raise, and I would like to celebrate this milestone of revenue, new customers, new strategic partnership, and we have a new T-shirt and amazing swag for it.
yes, you gotta have the t-shirts.
Who are your investors?
So we have some really awesome investors. We have our seed round was led by Congruent Ventures. And actually, the interesting thing, we work at the intersection of energy, clean energy, insurance, and finance. So we have a collection of investors that kind of represent all those areas. Congruent Ventures is one of the leading clean tech VCs in Silicon Valley. Um, they've been around for quite a while, and they led our seed round. We also, on the clean tech side, have Powerhouse Ventures, which Emily and her team, they were really originally well known for like an incubator and event space, and they're a big convener of the clean tech scene out there in Oakland and the Valley area. And then they opened a VC fund. So we were one of their first investments as a VC fund. They have a lot of LPs from the energy industry, veterans from the energy industry. We also have on the fintech side, Clock Tower Technology Ventures,
Yeah,
which is out of LA in your neck of the woods.
yeah.
And I think didn't we meet? Didn't we decide that we met at one of the Clock Tower events? Is that where we met
I think
originally?
so. I think that
Yeah.
I don't. Maybe it was Ben or Ned. One of them made a
Mm,
connection, or that's how we connected early on.
hmm
But yeah,
Yep. So yeah, Clock Tower's have been an awesome VC, and I really like they write smaller checks than a lot of fintech VCs, and they get as involved or as not involved as you want. They're really founder friendly. So highly recommend them on the fintech and tech side. We also have Muse, which is a New York based investor. They're into fintech and have a lot of commercial real estate background. I mean, we deal with solar on buildings, so commercial real estate is important to us. It factors into how we evaluate buildings, and obviously the landlords oftentimes are the ones that want the solar. So being well networked in that area has been helpful to us. And then we have Clean Energy Venture Group out of Boston, which is a collection of angels, and we have several other assorted angels
wow.
that came in our initial pre-seed angel round.
Now I don't know if you want to talk about it or not, but how much did you raise, and how much are you entering a new round soon?
Yeah. So one of the interesting things about being in the clean tech space, which tech people can be jealous of sometimes, is that we were able to get a lot of grant funding initially. So we raised an angel round in 2017 of a little over 600,000, and after right at that enabled us to get an $850,000 federal Department of Energy grant called Sunshot. And so we got a large amount non-dilutive. And then we've raised grants from the New York Energy Agency and the Massachusetts Clean Energy Center. So all in, maybe about a little, probably well over $1 million in grants. And
I
then
can
after
see a few
that, we raised,
founders. I can see a few founders going like, "What? Is that free money?"
yeah,
It's like, yeah,
yeah, it's amazing. It's amazing. And it would have been, it really helped us too, because, we were entering into some challenging territory. It's rather complex what we had to do, and the software and the technology that we had to develop to underwrite efficiently and be able to underwrite volume with a small team. And so that grant funding was instrumental, and I think also helped the investors realize that their money would go further. So yeah, if you have access to it, and go for it. It was really helpful. After that, we did raise a full seed round of 2.75 million. That's the one that Congruent formally led. And then since then, we've been preserving runway and being very efficient and scrappy, and keeping ourselves lean. And we'll see what probably looking to raise a little bit later this year to really propel growth.
well, if you're keeping yourself lean and you need to raise, it's usually an indicator of growth, and especially when you can show that growth and traction by number of projects and the size of projects, I'm sure that people will be very, very happy about that. Will you run out of capacity from Score? Are you looking for other partners and papers?
I think, well, so Score's been great, and they're a very large company. I mean, our individual transaction size maybe is around 500 to $2 million, 500,000 to 2 million in limit. So not too big for an individual project that a large insurer like that couldn't take down themselves. But given the collaborative nature of how the London market works, and our ambitions to take on larger risks and more, and grow our book, we do anticipate that we'll need additional capacity providers going forward. And Score has always kind of recognized that, and told us that would be a prudent thing to do, and that they'll be collaborative in helping us, with their network and other people that we've met along the way. So that will be in our future, is to expand capacity as we grow project the limit on the policy limits in particular.
Well, I'm sure that one or two syndicates from London will be happy to pick that glove and figure out how to work with you, because most of the time they need that MGA to turn, to bring in the risk, and they will take care of the coverage. Cool. That's very cool.
Yeah.
What's what's next for you guys? I know that you already covered it, and it's a very open question that I like to ask. What's next for 2021, 2022?
So what we want to do is grow. We started with solar specifically. It's a very proven technology, very common technology, and we want to grow into other technologies. Get more into battery storage, fuel cells, energy efficiency. So growing out the same products, very similar or the same underwriting methodology, but just with different and newer technologies, and then grow geographically as well, because this problem of credit is a worldwide issue, and sometimes even more acute in other foreign jurisdictions. And again, our underwriting methodologies and process is fairly similar to expand geographically, just a matter of licensing and regulatory compliance. So a lot of the money that we're planning to raise would go towards both technology, expanding to new technologies and expanding to new geographies.
Now, in terms of geography, are you looking at, let's say, inside the US, states that provide the different grants or tax credits, or you're looking into other countries that provide the same kind of support to make sure that more businesses adopt solar? Well, wind is less, but battery, especially as Tesla growing their offers. I don't know if it's working on the same thing or it's just a trend that may caught up by Tesla's competitors. Um,
Yeah, I mean, I think that first there's some U.S. states that don't have as aggressive solar policies, but still want renewable energy. So that is a new market, and you'll know from the insurance industry that in the U.S. we basically have 50 different insurance markets, insurance regulations, and so it's almost like going into a new country every time you go to a new state. So we'll definitely have some new states, but also new countries, and Canada, Europe would be our first stop, and then emerging markets hopefully after that.
cool, very cool. So we are reaching the end of our conversation. So I'll ask you the same question that I'm asking everyone at the end. Can you provide us a
Mm-hmm.
recommendation of a book, a TV, I don't know, a show, movie, or just a life hack that you picked up in the past year?
Yeah, can I do one and a half?
You can do 2.3.
All right. So my first one is quick. For anyone that wants to found a company, or if you've already started that process, make time for yourself, and especially for like physical exercise. And I would say put it in your calendar. Something that I didn't do. I thought I'd be able to keep the personal side and work life balance, but I would say the exercise is critical because it can be really long nights. You're eating on the road. You're not really your body isn't keeping up with your mind, and that would be my first one, is like calendar time for exercise and family time and time off. But my book recommendation, sort of, or my reading recommendation, is actually not to read certain thing. And so I figured to take the other angle. So what I did, I forget who told me this, but like 2 years ago, I stopped reading daily news. So like news on the 24-hour cycle. And I think it's really helped me with focus, like trying to start a business and not getting distracted by the latest crazy political thing happening, or some celebrity's tweet that, got them in trouble. And when you get off the clickbait 24-hour news cycle, and I just read weeklies and monthlies and listen to podcasts. And my thesis is that if it's important enough to last a week in the news, then I'll read about it and I'll know it. And if it's not, then I won't. And then it's been really a really illuminating thing for me, is to actually not read something that I used to read for so long. And so I've subscribed to some new magazines, and new podcasts, and that's been just a wonderful thing for mental health, but also just for like not getting distracted with the day to day. So that would be my life hack / reading advice. Ah, yes. Hmm. Mhm. Yes. Well, I tell you, since I stopped reading, like spending time on the daily news, I think my attention span's increased, and I've actually read, I think, already 3 or 4 books this year. I probably read 3 or 4 books all of last year. So I'm reading more long format, which is great. I did realize though I'd be in trouble if I said that the one daily thing everyone should read is Coverager. That's not clickbait. You have to
Of
read
course,
Coverager.
yes. All our love to the Ben Chuta family, Avi, Shefi, and the rest of their siblings. We love you guys. Okay. Yeah, the daily newsletter. Wonderful. Great. Jim, thank you very, very, very much for joining me today. It has been a pleasure hosting you here.
Yeah, thank you. I love the format of just more casual conversation, and thanks for inviting me. It was fun.